And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, November the 28th, 2022. I am going to begin here on the S&P again today and update this count, and I'm starting on the daily chart. And I am putting in a 5, the C, and the intermediate wave 2 at today's high in the S&P. And I already know that it did not top the high that we saw on the 15th. But now you can see how I've got this labeled. I'm going to change my style from candle to line chart. And when I do that, it makes a world of difference and shows very cleanly this 5 waves up and wave 5 topping wave 3. How? Because on that line chart, it's done on a closing basis. So similar, that's what Elliott had in his day. That's how he created all of this. And when I first learned Elliott, I stood in the crowd as I was trading, and I had a trading card. And every hour I'd look up and I'd take the last sale on the index that I was trading and charting. And then I'd go home and construct my charts. Done differently today, but still the same basis. And this is done on a closing basis. And we can see our counts cleanly here that aren't necessarily as clean or obvious when we shift over and we go to the candlestick chart. So even though we got that 5, this tail brings it up to here, and we still, I'm going to call it the 5. Because it still fits and it's still clean. Here, the 3 is going to sit a little higher, but I am leaving the 5 there because on the closing chart, it's here versus, and this was a new high that we needed to see. So here in the S&P, I am feeling that minute wave 5, minor wave C, intermediate wave 2, all complete. We're heading lower at the beginning stages of an intermediate third wave. Now, what do I need to leave open? Well, as crazy and as screwy as this market has been, I cannot count out that what we're going to see is an A, B, C, and the 4 comes over to here, and we still have a 5th wave up. That I have to leave open. Or this actually is 3, 3, 5. So that fits very cleanly. But yet I'm giving this the benefit of the doubt that it's possibly the 1st wave, 2nd wave, 3rd wave, 4th wave, 5th wave to complete a 5-wave structure and wave C. If not, then what we got going on is 3, A of 4, B of 4, C of 4 in progress, possibly because this is a flat, brings us as close to 39.11 as it can get. That can happen. And this 4th wave actually could even be unfold in a triangle pattern, because this is 3, this is 3, this is 3. If this works out to be a 3, is this A, B, C, D, E, launch? Possibly. Now, allow me, and I know I still owe you guys an Eye of the Storm podcast, where I will go into more detail about what is going on all around us in our trading world. But leave it sufficient to say, folks, there is still a ton of money out there. And a lot of it is sitting in what they would call risk-on positions. As we get close to expirations within these realms, these sectors, that have these derivatives, that have all of these positions sitting in, you're going to get a lot of crazy play back and forth. For example, we did have, and I'm going to go down to the 15-minute and see if I can't find it. Right there. Sold it, bought it, sold it, bought it, sold it. Completely where it was driven by what was somebody thinking on this. And then, the different things that took place in this market versus, the up and the down. For all I know, it could have been somebody taking the risk off, and the hedge was buying the underlying, buying the index. Conversely, somebody else taking the risk off, but it involved selling the underlying. Depends on what it's all hedged with. And if it's all hedged with the underlying, there's a whole bunch of different things that go on to this. Plus, it could be going on in any of the individual stocks that they group together. So again, understanding that sometimes our moves do not make sense in terms of what are they doing and what's going on in their head. But it's all going to be with their position. So how do I need to leave this? Let me go back out here to the 4-hour at least. If this indeed is the completion point, then I'm going to just put preliminary, please, the preliminary, because although I'm labeling it, I need to see continued breakdown. Now we're looking for, on that hourly chart, we're looking for the development and execution of 5 waves down. And that's going to be our first confirmation that that high is likely in place. And we're still going to have to wait out a little bit, because we've got, what if it's just a C wave? If this is A, B, and a C wave down, which is going to be 5 down. It gives us some confirmation. It does not conclude. We need to wait for the follow-up and then also the next line. So in other words, we get an A, a B, and a C, and 5 waves down take us to there. What we would then be anticipating is 5 waves to build back to the upside to finish the 5th wave. Indeed, remember, right? A, B, C, 4 comes over to here. This doesn't exist yet. Then we have the reality that we will get above 41, and that we're likely going to head to those levels that we have discussed. To be determined. Right now, I'm leaving my labeling the way it is, and that would suggest that the market comes down in 5, goes up in 3, and comes back down in 5 to give me double confirmation that, yep, that high is in, we're cooked, because the second leg down would definitely start to break down through here. Ultimately, I want it below that wave 1, which was 38.67. That was the high. I want it below there, because then this is done. This is a 5, and we're moving down into the 3rd. So yes, be patient with this. Still trade it, but be patient. A lot is going on around this. There's a lot going on in the bonds. There's a lot going on in the dollar. There's a lot going on in the currencies, because it is a big correction. And the choice now is that it's being wrapped around, how are these things going to come in? We had a few Fed governors, right? They're sending them out, right? Put them on the stump, get them out there. They're letting them talk it up. And this is how we got some big wild gyrations today. Had a Fed governor coming out and talking about got to be more aggressive, et cetera, boom, dropped the market. And then what happened next? They turned around, they bought the market all the way back up after they just dropped it down based on what they heard via the news. And the next line was taking it back up, which just could have been nothing more than risk off. Somebody taking the risk off the market, off of their position. And maybe they had a long and they had to sell it, and then they had to buy the underlying, because the hedge was they were already short the underlying versus what their position was. Who knows? These are things that kind of come into play, folks. And I know that a lot of it is like some foreign language, but understand that it is at play, and it is in what it does control in part what we're looking at, how we trade, what's going to happen in the market. We have that reality. So here we got GDP. And this is something I really want to talk cleanly about. We got GDP coming on Wednesday. What do you think is going to happen if in any way, shape, or form that comes out marginally better than what they're expecting? Can we get another one of these? That came out of the blue and they ran it. Remember, that's the day where the NASDAQ, where the S&P jumped up 80 to 100 points, I think it was, within a minute that day. That was the CPI. Now we got GDP, which should confirm or not confirm, or are we really heading into recession? We had Deutsche Bank coming out saying, for sure, 2023 going to not be a good year. It's going to affect earnings. It's going to affect everything. It's going to affect, we're going into recession, blah, blah, blah. Boom, 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 boom. We start to tumble low. Now we're going to get the proof. If GDP in any way, shape, or form comes out showing that, nope, we're not, I think they come and hit that button and it just buys it just like they did. And we end up that this is the 4 and we're going to go up in a 5. Now, whether it's reality or not, I can't speak to that. But I can tell you what I think can happen. Possible. So I'm leaving this the way it is. But I'm also keeping in the back of my mind, if it does not break there and then in turn start to break here, all the rest of it's still possible. Now we got tomorrow and then Wednesday morning pre-market, 8:30 Eastern on Wednesday, we get GDP. Tomorrow we get consumer sentiment. I think we'll get a reaction off it, but I can't imagine consumers are like jumping up and down going like, whoo, we're just feeling really happy and glorious and wonderful. Our sentiment is like, we're so positive. We're positive on the economy. We're positive on jobs. We're positive on everything. I just don't see that. But hey, that's me. Now, how can I put this together? It does present its challenges. If I'm going to label it as the end of wave, intermediate wave 2, I'm looking for the beginning stages of intermediate wave 3. What's going to be in there? 5 waves of minor degree with 1, 3, and 5 heading down, 2 and 4 correcting. All right, that's a minor degree. These are minute degrees. So what's going to come off first? And that minor wave 1, 5 waves of minute degree for minor wave 1. So that on the hourly chart, it'll look something like that. This is the itty bitty beginning. So a lot more to come in terms of where this market needs to kind of start coming off to. So again, I'm looking for the development. We start to get these numbers this week. And if you're a position trader and you're looking like, what do I need to do with my positions? I think you can start rolling stuff out. If you're thinking that, if you're working against an expiration, I think that there are option plays that are worthy, of putting some risk on for downside move. But again, I'm a day trader, so please understand, I was an options market maker and I did a lot of trading as an options market maker. And there are ways that you can put positions on and ride them and play them to the Elliott account, to your own, situations. And there's a lot of other people that can do it. And then we have a lot of algorithms that are just out there scouring and they're trading and hedging and it's a done deal and they just put the trade away. It's done. Their risk has been removed, but it affects the market and how we get going and we don't get going. Okay. So for tomorrow, consumer sentiment, continuation likely to finish up if indeed this is an ABC. I'm looking for it to get closer to this to finish that up, being that this is the A wave, the C wave should come down to the A wave. It's pretty flat. That brings it back down to 39, 11-ish to finish up. And then we rally again. If the 4 comes here, we rally again. And we're still looking at 80 to 4,100 plus. Excuse me. So over in the NASDAQ, not as easy. The NASDAQ is absolutely the weak link. This C wave remains in place for right now. But I have looked at this being 1, 2, 3, and then we're in this bizarre 4. Or I can even put 4, and then I can do a 5, put 4 actually over here, put this 5 wave that I was expecting to continue higher, even if I'm putting X and this is going to be an A. So if this is C and I can put an X wave there, or catch this one, C, and this is A of X, B of X, C of X. Then we rally yet again. These are the possibilities. Now, I got to match it up against with what actually is physically happening or economically happening all around us. We have plenty of reason to sell this market. We have plenty of reason to sell things. If we're heading into recession, yes. I'm reading that there are those that are saying that our market is really set to really decline pretty strongly because people are totally unprepared for a recession. They've not recession-proofed or whatever. And it's like, well, possibly. Going back, there's so much money in these markets right now. And a lot of them are not necessarily that the individual themselves is the one doing the trading. They're giving their money to a fund, to a hedge fund, to a trading firm that operates these hedge funds, or different things in every area of trading. They're in all markets. That exists. So the idea that they'll be able to take risk off and risk on just easily, not realistic. It will move markets. And as things get to expiration and it gets towards a strike price, and there are strike prices in all classes of everything. So whether you're talking treasuries, whether you're talking bonds, whether you're talking currencies, whether you're talking precious metals or other commodities, whether we're talking equities, massive. They're going to come in and adjust. That's going to produce a lot of strange moves. Right now, what I am saying as well is that in a corrective move, it corrects ABC. We're looking for the trend to pick up again and give us a 1, 2, 3, 4, 5 down on an intermediate degree. That's what I'm looking for. It's going to be big. These are minor. I'm going to go out to my daily to show you that that's the intermediate wave 1. That's intermediate wave 2. Now, if I'm thinking that this thing is over here, or possibly even here, which makes this total garbage and very hard, I can put fibs up that'll show sub 10,000, easy sub 10,000. And I trust me, if the United States in its trading wraps itself around what a recession is going to do, they'll want to be out. They'll want to move their money, because it's not pretty. And I don't think I was trying to remember when the last time we had one serious recession. So we've always been bailed out. We got bailed out in 2009. We got bailed out in 2020 by the government. And now it's time to pay the piper, excuse me, that pauper too. But it's time to pay the piper. So anyway, here in the NASDAQ, it's just too difficult to actually say what was going on. But I will tell you, I went back and I looked at this count. I tore it apart. I tried different scenarios, and they don't fit to what this one is. Even if I went back to one that I was saying that this was intermediate wave 3, not intermediate 1, but intermediate wave 3, this would have been wave 4. It's too big, and it doesn't fit. So I leave it as a wave 2. Or is it a much larger rally? It doesn't fit because it's such junk. We got people talking about that they're talking like these, reaching these levels. I'm like, really? How? I don't see that. I do see continuation to the downside. I do see stuff like this happening. versus this and this. Now, if this is an ABCA, we're doing ABCB, and then we get a C wave, possible, but it doesn't fit to what this is unless I switch all of that around. I have to move that over to here, turn that is still in play, and it doesn't necessarily fit. We'll see, because I have to change the degrees of everything. And I did that. So we're going to look. What can I say about tomorrow? Because I know I owe you guys this larger update to really dig in and go to the long-term charts and really look at them. I think we need to consider like an ABC, A, B, C, and it's going to come back into here, or even below. So if that's the case, I'm going to do a little bit A, oops, got to get it there, A, B, C, and then I'm going to put it down there, up to there. The C wave, you're looking, this thing can come all the way down here and then still rally. If I'm looking for an X wave, I'm not looking for it to come down back down here. But if this is ABC X and we got another ABC up, that is a possibility. How is that going to play out against declaring that the S&P has finished its wave two? Now you see the dichotomy. Now you see this little bit of a problem between these two, which are actually weighted very similarly with our big stocks. Apple, Amazon, AMAT, Meta, Microsoft, NVIDIA, et cetera, et cetera. They're all in play in both the S&P and the NASDAQ. For them to be so at opposite ends, where one's going to travel lower at a faster pace while the other travels higher, does not fit. But I have to say that this is a possibility. ABCX, if we come down even to there, 13,041, 11,341, put an X there and we rally, does that take care of GDP for this cycle? Does that take care of what we got coming at the balance of the week? The employment situation on Friday? Does it include that? Does it get it down to there? And then the market goes, okay, we got all that. They're gonna pivot, they're gonna whatever. And we rally and we pull. Or do we come down tomorrow? And then Wednesday, when GDP comes out, somebody has already got it together and they hit their button that does one of these. Same deal. A, B, C, bring that C wave down, just get below A, and that'll make me happy. Then I'll put a C there. And if we get this Wednesday trip, it's the next ABC up. That's where I got to leave this, folks. We got to trade what's in front of us. We've got to, it's just like, and even that, sometimes the best decision you can make is not to trade. I will share that with you because there's just too much pulling and pushing and going on. And then suddenly it'll get the move. And it's too easy to get caught up into the, oh, I got to get in. Sometimes the best decision you can make is not trading at all. So for tomorrow, I am going to look for continued downside. As a C wave, it needs to get itself below that level, 11,520. We already figured out it can go 515, 468, 341, comes down on 5. I can label it C. I can put an X there, and we rally. Do we get that on Wednesday? I have no clue. But remember, this was 1/10 better on a CPI. 1/10 of 1% better. And they jacked this thing. Could they be waiting in the wings? There's a lot going on. So check it out. We'll see what happens. I'm just going to play the number. There were some good trades today. It wasn't as easy, particularly here in the NASDAQ. The S&P might have been a little bit cleaner, but the NASDAQ just tore itself apart. pushed and pulled and pushed and pulled and pushed and pulled. And it's nothing more than just, we have so many options trading and they're coming in and they're hedging. They sell something, they hedge with the future. They buy something, they hedge with the future. And if you're buying puts, you're buying the underlying. If you're selling puts, you're selling the underlying. If you're buying calls, you're selling the underlying. If you're selling calls, you're buying the underlying. So think about all this synthetic movement going on. So we have to leave room for another run up. We've got important figures that may just blast this thing all the way down. Then I don't have a problem in shifting this back to 1, 2, 3, 4, and then putting a 5 there. It failed. And I'll show you again, we go over and we drop this down to the line chart. It's not as bad. It's not quite as high as that. But it's still like an $80 failure. But it could be the case. And that means 1, 2, 3, 4, 5 failed. Right now, I'm leaving it ABC, X, ABC. But we got that in not swinging right with the S&P. And that's, I'm sorry, but that's where I need to leave it. So just be open to the movement and have your points via fibs. You can do intraday fibs that they'll carry you on these moves. Use your Elliott, and even when you're counting these smaller moves, folks, you can use your Elliott. You can come in here and you can see and catch these moves, right? If I'm doing 5 down, I'm going to do, this was what I was talking about before. Buy it, sell it, buy it, sell it, and then just keep selling it. This was crazy, crazy, crazy. But we can count it, and we can trade it. And have patience with your move, because you're going to get a lot of crap of this back and forth, back and forth, back and forth. And oh, here we go. I did trade here, but I was tired of it going up, and I wanted, I was like, come on, let's go, let's go, let's go. And I finally had to tell myself, get your hand off the keyboard, get your hand off the mouse, let this move happen. Because I felt pretty strongly about it. From there, it's a 1, 2, and then I got a 1, 2, 3, 4, 5. So if anything, 1, 2, 3, here's a 4, we come down on a 5. And that's just from this level. That doesn't take it back to there. Could be different. Could be another ABC. Who knows? All right, I am going to end it there. Our next update will be on Tuesday, the 29th.